Right now, at this exact second, Strive Inc., trading under the ticker ASST on the Nasdaq, is changing hands at $1.18. That represents a raw upward move of 4.5 cents, translating to a solid 3.98% gain on the intraday session so far. If you are watching the order book, you are seeing a flurry of green prints trying to chew through the ASK liquidity at the 119 level. On the surface, when you scroll through your Robinhood app or check your watch list on Webull, seeing a stock at $1.18 usually triggers a specific bias. You think penny stock. You think volatility. You likely assume this is some forgotten tech company struggling to stay listed. That is the expectation. The market narrative suggests that anything trading under $2 is a gamble, a lottery ticket with no fundamental floor. But the reality of Strive Inc. is significantly more complex and, frankly, far more aggressive than a standard penny stock chart suggests. What you are looking at is not just a small-cap company bouncing on noise. You are looking at a company that is actively attempting to engineer itself into a high-beta proxy for Bitcoin and a bastion of shareholder privacy capitalism. This 3.98% move today isn't random variation. It is a reaction to a specific strategy that Strive is deploying, a strategy that borrows heavily from the playbooks of much larger companies, yet it is happening here, in the micro-cap trenches, accessible to anyone with a Fidelity brokerage account or even just a few dollars in cash management on a mobile app. The disconnect between the penny stock price tag and the macro asset manager ambition is where the opportunity and the massive risk resides. Let's look at the price action we are seeing right now. A move of nearly 4% in a single session for a stock priced at $1.18 implies a shift in sentiment. Volume is the key indicator here. When you see Tesla stock or Nvidia stock move 4%, it moves billions of dollars in market cap. When Strive moves 4%, it is often driven by a much tighter float and highly motivated retail flow. Today, the buyers are stepping up. The chart shows a clear defense of the $1 mark. This is psychological and technical. In the world of online investing, that $1 threshold is the line in the sand. Staying above it keeps the Nasdaq listing secure and keeps the stock marginable on platforms like Interactive Brokers. If it slips below, the algorithms at major shops like Schwab Intelligent Portfolios or the risk management desks at SoFi Invest might flag it as too risky, cutting off liquidity. The fact that we are pushing toward $1.20 suggests the market is pricing in survival and potential expansion, not liquidation. You have to understand the mechanics of trading a stock like this. It is different from buying Tesla stock, where you can just hit market buy and know you will get filled within a cent of the last price. With Strive at $1.18, the spread matters. If you are using a Fidelity trading platform or Interactive Brokers stock trading workstation, you can see the level 2 data. You might see a stack of sell orders at $1.20. The stock needs to churn through that supply to break out. Today's action, that upward march of 4.5 cents, tells us that the aggressive buyers are eating that supply. They are betting that the company's pivot to a Bitcoin-treasury model is going to work. This brings us to the core of what Strive Inc. actually is right now. Most people know the name Strive from the asset management side, the ETFs that launched with a mission to depoliticize corporate America, famously associated with Vivek Ramaswamy. But the entity trading as ASST is the result of a merger with asset entities, effectively creating a public vehicle that combines digital community management with a corporate balance sheet strategy focused on Bitcoin accumulation. This is why the stock moves the way it does. It is behaving less like a traditional financial services stock and more like a leveraged bet on the future of digital assets. When you buy Fidelity mutual funds, you are buying a basket of safety. When you buy Strive Inc., you are buying a specific, concentrated bet that the company can raise capital, buy Bitcoin, and see its share price appreciate as the asset on its books appreciates. The tension here is palpable. The expectation is that this is a small marketing firm. The reality is that it's trying to become a junior version of MicroStrategy. Investors are looking at this and asking, can they pull it off? That uncertainty is what drives the volatility. You see the price whipping around because every time Bitcoin ticks up, the algorithms trading Robinhood crypto correlations start sniffing around stocks like ASST. If Bitcoin has a good day, Strive often has a better day, percentage-wise. If crypto flushes, Strive can get hammered. Today, the correlation is working in the bull's favor. Let's take a step back and talk about how this fits into your broader investment picture. If you are engaged in self-investing, you are constantly balancing risk. You might have your core holdings in Fidelity ETFs or a SoFi robo-advisor account that just tracks the S&P 500. That's your bedrock. Strive Inc. is not bedrock. Strive Inc. is the speculative edge. It's the stock you buy when you want exposure to a specific corporate strategy, the anti-ESG plus Bitcoin-treasury dual mandate, without buying the coins directly. For users on Robinhood fractional shares or those utilizing interactive brokers platform tools, this stock offers a way to play that narrative with a very low entry price. You don't need thousands of dollars to take a position. You can buy 100 shares for the price of a nice dinner. That accessibility drives retail interest, which in turn fuels the erratic but upward trending volatility we are seeing today. I want you to pause for a second and think about your own portfolio. Do you hold any companies that are explicitly political or explicitly tied to a single commodity like Bitcoin? Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for a dip back to $1 before entering. I am genuinely curious to see where the sentiment is among you guys. Now, let's look deeper at the volume profile today. The turnover is significant relative to the market cap. This isn't just retail traders on Fidelity mobile app clicking buttons. This volume suggests that some smaller funds or high net worth individuals are positioning. They are likely looking at the recent earnings reports and the merger news with Semler Scientific, another company that adopted the Bitcoin-treasury standard, and connecting the dots. The consolidation of these Bitcoin-treasury companies creates a sector momentum. Strive Inc. is positioning itself at the center of this. They are betting that the market will reward companies that hold hard assets on the balance sheet. This is a direct challenge to the traditional Fidelity wealth management view that cash should be invested in short-term treasuries or buybacks. Strive is saying, no, we are going to hold the hardest money we can find. This strategy changes the fundamental analysis of the stock. You can't just look at their PE ratio or their quarterly revenue from digital marketing services. You have to look at their net asset value, NAV, relative to their Bitcoin holdings. As they raise more cash, perhaps through equity offerings or debt, and buy more Bitcoin, the floor price of the stock theoretically rises, assuming Bitcoin doesn't crash. It is a recursive loop. High stock price allows them to raise money to buy Bitcoin, which raises the stock price. It is a brilliant, albeit risky, financial engineering flywheel. Today's 3.98% gain is the market pricing in a slight acceleration of that flywheel. However, we must address the risks. We are talking about a stock trading at $1.18. The interactive broker's fees for shorting this stock can be high because shares are sometimes hard to borrow. This indicates that there is a substantial short interest, people betting the stock will go to zero. These bears believe the expectation that this is just hype. They think the business fundamentals don't support the valuation and that the Bitcoin strategy is a distraction. If the price drops below $1 and stays there, the Nasdaq compliance warnings kick in. That is the danger zone. A reverse stock price could happen, which often kills momentum. Investors using SoFi Investing or Robinhood Investments need to be aware that penny stocks have a high failure rate. The reality is that while the upside is explosive, the floor is shaky. But here's where the contrarian take comes in. The anti-ESG angle is unique. Strive differentiates itself by catering to a massive demographic of investors who feel alienated by the policies of major asset managers. By combining this cultural stance with the Bitcoin financial strategy, they are creating a loyal shareholder base that might refuse to sell even when the chart looks ugly. This diamond hand psychology can create a floor that traditional analysts miss. If you are analyzing this using standard fidelity iris logic, you might sell. If you are analyzing it as a cultural movement, you hold. This divergence in holder psychology creates inefficient pricing, which is exactly what a smart trader looks for. Let's discuss the technicals on the daily chart. We're seeing a higher low pattern forming,